Beautiful guys, this is Sam from Clark Street. I'm back. It's November 2nd, and I wanted to do a quick video to really go through our risk management. The system that we've put in place over the last, let's call it 4 or 5 months, has been doing really well. We've been doing really well. But nevertheless, it's important to go back and check all of our trades, sort of highlight the possible tilts that can emerge from, our behavior, especially the last couple of weeks. I think one of the big reasons was probably our big trade on gold has potentially made us a bit more uh, feel comfortable and on cloud nine. But those are the moments where you sort of want to catch yourself up before tilt can become something much worse and can impact your P&L and your behavior. So I've prepared a couple of slides. So first, let's just go through our metrics. As you guys know, you're welcome to access this on FundSeeder. This is my account, full disclosure, and yeah, you can track basically a bunch of traders all together, ranking them. So overall, we've been doing really well. We've been riding gold, for the last 3 months, as you guys know, my biggest trade. And yeah, so I mean, overall, what do I look into these metrics here? The most important one for me is my annualized vol. I run my strategy based on a 20% annualized vol, and my whole risk behind it has been, to make sure that I always constantly, respect this annualized vol. So in the grand scheme of things, we've been, really respecting it. 20% annualized vol is what I want, and we've been risking that appropriate amount. And so overall, I'm pretty happy with the way our system has worked out over the last 4 months. However, for the pro subscribers that have access to daily updates on my stops, my trailing stops, I've made sure to systemize much better or quantify much better my risk. And as you know, I update daily using trailing stops. This has, improved a lot my trading over the last 4 months just by basically not getting out when I want to, basically letting the trailing stop hit it. And yeah, and basically the only sort of discretionary decision making I have to do is my forecast based on, 0 to 20, 20 being max long, 0 being not in a trade, and minus 20, sorry, is max bearish. So however, I've highlighted 3 points, 3 tilts that I wanted to discuss with you guys, which we can go through, together. Um, so let me just share this right here. So you guys have access to this at all times, sort of like what's happening in our quarter. So the first tilt that I'd like to post is that, based on I've done a, sort of a back testing on my trading history. And I'm, normally my strategy runs bets for 3 weeks, right? That's sort of like how I, my edges where I don't necessarily hold the trade for a couple of days, nor do I, for 1 week. Normally, I try to hold, thesis or market thesis bets for, 3 weeks and more. And over the last, let's call it 2 months or so, I've started taking bets with an X parameter that is much lower than what I'm used to. As you guys know, I usually use an X parameter of 3, which is roughly with a holding period of like 17 days. But I've been caught myself, like just looking a bit of the recent trades. Like we went short ES last week. Even our silver is sort of a 2x trade. So we're using more and more these value of X of 1 and 2 in our system, which basically is pushing the average holding period much shorter term. And that's something I know, based on my trading history, is it's less alpha for me. And I basically I should be more and more aiming for that 3x parameter of vol, essentially betting on, what's happening. Can I hold this trade for the next 3 weeks? rather than just playing these short little trades. Overall, they haven't cost us a lot of money, which that's fine, right? Like, but these can accumulate, and I know where my edge is, and I want to make sure to, completely be, you know, basically avoid the noise of day trading, little moves, which I've done in the past, and normally, I don't have an edge there. Sad to say, but that's the reality of my trading. So as you can see, like these short little trades, like um, I'll just cover these very quickly, but our long cat, our first one, we had an expiry of two. Um, Also, we had the ES future, which is right here, which we lost 0.3 R, but expiry of one. So really going forward, I will go back to using, the minimum X parameter that I can use in my trading is three times sigma. That's what I want to do going forward, and not reduce it to X of one or two. That's just not my edge, not where my trading is, and you guys are well aware of this. That was the tilt number one, which let's try to work on that. It's pretty straightforward. Just use an experiment of three going forward, and more. As you guys know, like Hang Seng and Bloomberg Commodity Index have experimenters of eight. So those are fine. Those are more long term, and I believe that I have an edge, over a longer period than a shorter period. The second thing is, as you guys know, like I use a trailing stop on all my positions. That trailing stop I update daily. However, I've been caught myself twice now with two trades, sort of like deviating slightly. So either on one occasion, I didn't increase my stop even after making a new, let's call it level towards my direction. So if I'm short, I'm trying to make a new low, I now update my stop based on that new low. I've been caught twice doing basically not updating my stop and sort of letting it there because I feel like the trade hasn't gone my way. Overall, that's the system that I, put in the first place. Whether it's a good system or a bad system, we shall see over the next, we need to build data on this, but I want to respect, my system, which is basically saying, if you make a new high or new low, you adjust your trailing stop. So that I shouldn't wait. I'm currently in the markets. I'm updating my sheet every day, so I need to make sure that I constantly have the right stops in place. The second tilt, based on stops that I did do once, which is even worse in my opinion, is that knowing that I arrive into a big risk event for the day, I think it was Jackson Hole, and I sort of put a bit higher my trading stop, which overall is just completely deviating from my risk. So another sort of tilt that we need to watch and don't reproduce. I hope you guys can like learn from these tilts, really analyzing them. Another tilt that this is more of a holistic view. I tend to write a blog before taking a position. That's normally what I do. I've been caught once or twice, I believe, really like sending a group chat message rather than write a blog about it. Normally, I would always prefer writing a blog about it. And if I were to take a trade and put it on group chat, I would need to write it in one of my blogs, which I've done. I've it increased the amount of trades taken and reduced, sort of like the framework that I hold myself accountable for to come up with a trade by actually writing a post and sending it beforehand, really thinking about the thesis before even taking a trade. So I want to change that going forward. If I do send a trade alert, I'm expected to write something about it. It could be short, doesn't matter, but it needs to be written down and sent via post on Substack. So those were the three sort of tilts that I wanted to highlight. And going forward, as you guys know, I've been using Edgewonk. It's a great platform to track your trades. And I've basically implemented new rules, new conditions. Let me zoom on this so you guys can sort of look by yourself. But those are going forward, I think next month. So let's do actually every second of the month, go back into that month and analyze the trades that we're taking and really more like the sort of indicators that I look for, and I write down so we can sort of accumulate them over the long term and highlight, how our system is going and how is it working? Should we deviate from that system or not? So things that I will be, looking at is, um, this is more about making sure that my book is constantly edged and using the IDM, the multiplier diversification factor that I use that I update you guys on. I should be updating that every time I change positions to make sure that my bets are basically hedged in terms of their beta to each other. Emotionals, that's pretty straightforward. How do I feel? Confident, hesitant, fearful, greedy, revenge trading. During that trade, again, sort of the same thing that we can highlight. Um, Sort of the cognitive bias. So did I sort of chase this trade? Did I ignore like contradictory, macro factors? Was I sort of re-entering a trade because I was sort of mad or something? And did I refuse to cut a loss? I mean, that usually never happens now with the system, but I still have it there in case B. Trade execution. So did I follow my plan? So the exact framework. Did I deviate a bit? Or did I completely took an impulse trade? And of course, guys, like I never tend to do this anymore. Like I've never done it. I can't remember the last time I've done it, but it's there to just remind me to never do it. Um, Let me just continue on here. So yeah, so this is just qualifying, how big the trade worked or not, what was good with it. You guys can just pause this video and go through my indicators because I think they're important. What went wrong? Would I take this trade again? I think this is just being honest with yourself. You can sometimes write winners that you basically hate, you don't like it, or vice versa. You hold losers that you really fall in love with, but you need to realize that the market isn't there following you, what you think is right. So, anyways, and some other key takeaways. What I wanted to sort of add here is those two things. So I'm really going to go through the forecast. So as you guys know, I don't want to take, basically I want to take high probability trades. That's how my framework works. But I've realized that this forecast is really sort of a blend of what I'm thinking at all times. Now, I want to say that at least 10 points out of those 20 is allocated to, fundamental analysis completely. Maybe another 5 points is technical analysis, and then another 5 points is sort of like momentum slash positioning. So big positions that we went through this year, gold was one. Bonds, even though we broke even, we were massively long on bonds. Those are because the fundamental sort of aligns with the price action and momentum. And I tend to want, to have the average at 10, max size being 20. Very rarely do we allocate 20. Lastly, the stop loss factor. So this year we spoke about, but really trying to disregard the 1 and 2x and really going through 3 and more if need be. And then, yeah, the execution discussion, which I just wrote about. So did I write a blog? Did I wrote a chat? Or did I just took the trade before writing about it? Anyways, guys, I hope you enjoy this little, risk management video. It's really important as a trader to just constantly, be self-aware of what you do and just keep on pushing and improving. Thanks, guys. This was Sam from Clark Street, and have a wonderful week.